All right. Good afternoon, good evening, and good day for everyone for joining us. And thank you for joining us again for today. It's Thursday, Thriving Thursday, and we're live with First Home Alliance here tonight. And we got a treat for you tonight. We have a new guest and also people that you've seen before. And so, again, I want to say thank you for joining us this evening. And want you to go ahead and subscribe. If you haven't subscribed, go ahead and subscribe. So make sure that you get the notification each time that we go live. We're going to share some knowledge with you, so you'll be able to get a notification. But we're also trying to build a community. We're not only building a community, we want you to join our community, and we want to enlighten you and give you some good information that's going to get you on your way to help you. One is to be financially stable. We want you to thrive in the community. And of course, those guys out there are homeowners. We want to sustain homeownership, but also those that may have the desire to become homeowners, we want to help you along that path as well. And so financial fitness is our business. And so we're going to go ahead and get started. Again, I want to welcome our Facebook group. I want to welcome our YouTube and also Instagram, and those that used to join us on Zoom. We want to welcome you this evening, and we shall go ahead and get started. Charlene, go ahead and speak with our audience for a little bit.
Hey now, again, like Larry said, hello. Thank you for joining us. Like, subscribe, all that good stuff, share. For those of you who are new, let me tell you a little bit about First Home Alliance. We are a HUD-approved housing counseling agency established in 2002 by our president and founder. Where the idea come from? His mother purchased her first home at the age of 65. So when he finished serving his country, he decided to serve his community, and this is how First Home Alliance inception came about. Now, what are the services that First Home Alliance provide? We provide pre-purchase counseling as well as education. Education is a first-time home buyers class that we normally have every third Saturday of the month in Northern Virginia. We also provide loss mitigation services. What is that, Charlene? What are you talking about? So, loss mitigation. I currently own a home. I'm suffering. I'm in a hardship, whether it be through the furlough, whether it be through COVID, death, disability, divorce, life, just lifing. First Home Alliance acts as an advocate on your behalf to do what? To maintain and help you protect your asset. And so we want to work as an advocate on your behalf with your servicer to put you in a better situation. We also offer rental counseling as well as debt budget management, credit counseling, and emergency preparedness counseling as well. Again, these services we provide virtually, but we are located in Virginia as well as Maryland and the south side of Chicago. But y'all heard me say it over and over and over again. You're probably tired of hearing me say it. It does not matter where you're located. First Home Alliance can assist. So if any of the services that I just went over piqued your interest, we want you to stay tuned, listen to the conversation, and find out how you can get services from First Home Alliance in the future. Larry?
We're going to say thank you, Charlene, and we're going to go ahead and jump back to the stage here, and we're going to welcome back in our partner, our community partner that's going to give you some good vibes tonight. And this evening, we're going to be talking about investing basics. And Victor is going to have another guest that he's going to introduce as well. So go ahead, Victor. Hey, welcome to our audience on Thursday, Thriving Thursday.
Okay, yes. Thank you, Larry, for having me once again. And thank you for the audiences for being here. Like Larry says, if you haven't subscribed, make sure you hit the bell in our communities, Facebook, and all the social medias out there. So thank you for spending the time. And our hope and our goal is to bring you value, to bring you knowledge that you can actually put it to work and to make informed decisions. All right. So today we actually have an interesting topic. Is that dear to me? Is very interesting because millionaires are not made by saving, but actually investing. So today we have pretty good stuff, I think, to cover. So we'd like your participation. Participate with us in the chats, share experiences as we go along covering. But before we actually get into the juicy stuff and to the exciting stuff here that we're going to learn today, um, I want to, for those that don't know me, let me present myself, introduce myself. My name is Victor Uludina with our World Financial Group and also our World System Builder, and being in the part of this campaign, financial literacy campaign, for about 2 years. And our goal is to educate 2030 million by the year of 2030. So if you find value today in today's session, I encourage you to come to check our workshop. They are free, and you have different times a day that you can sign up. They are online, so take advantage. But before we get into the topic today, and I'd like to share our contact information here in just a moment. But I would like to also come on and bring to the stage Selvin Hernandez. He's a professional in the finance industry for many years. So, feel free to contact him, and he's going to share the stage, his expertise with us today. Selvin, thank you for being here for the last minute notice and being able to jump on and share with our audience, who a little bit about yourself.
Yeah, absolutely. Thank you, Victor, and thank you guys for allowing me to be on the platform. So basically, yeah, I'm actually part of the. I'm on the same mission as Victor. I'm part of World Financial Group as well. And just to kind of make it brief and just to kind of make it short and simple, again, my name is Selvin Hernandez. I've been in the financial services space for over 10 years. What I do is I help individuals. I'm on, like I said, same mission as Victor. I help individuals and families save money, grow money, and protect their income. Just to kind of put it, in simple terms, that's pretty much what we do. So no matter what happens in the economy, we're always helping people moving forward financially. So, like I said, save money, grow money, and protect money. And one of the topics I will get into today at some point will be just kind of discussing a little bit about investing. Like Victor mentioned, millionaires aren't made by saving, but by investing. And one of the big things we discuss and we educate our communities on is, just the power of compound interest. And there's different types of accounts that are in the market where, you can gain the upside of the market, and when the market crashes, you don't suffer any losses. So, anyways, long story short, same mission as Victor. We're here just to educate our communities and talk to people about the importance of financial literacy, and I'm very excited to be here. I appreciate it. Thank you, Victor.
All right, absolutely. Thank you for being here, and welcome to our guests. Thank you for joining the chat. Thank you for participating. All right, so let's kick it off, Selvin. Maybe with the question to unpack. We all hear about investing, but for some folks may be afraid. Maybe they don't know what to start with. They don't even know about investing. So let's go ahead and unpack a little bit, and make it fun and make it interactive. So one of the importance, of course, investing is that want our money to grow. There is a saying that I like the idea of sleeping and having dollars under your pillow, and the dollars make more dollars. So that's basically. I mean, and you will agree, Selvin, right? Based on your experience, that investing is basically, like you mentioned, taking advantage of opportunities and making money
Yeah,
grow.
absolutely. And when it comes to investing, there's several different types of vehicles. There's obviously the riskier ones. There's ones where most people, especially in today's economy, they prefer stability. Your money doesn't grow, but it grows at a slow rate. But what we pretty much educate people on is a vehicle where you have the stability of the market. You gain the upside of the market, and then you also, when the market tanks, you don't suffer the losses of the market. So that's something that I want to, kind of talk to people about. But yeah, you're absolutely right.
All right. Absolutely. Yes. So, and before anything, just a quick disclosure. I just want to make sure that our audiences are aware that no matter what professional you talk to, understand that investing always involves risk. Yeah. So if you are saving money, so you have folks have to have their basically the savings, 3 to we recommend, or experts recommend 3 to 6 months of emergency savings. But also, because investing, it could be, I mean, you could lose it, right? I mean, no professional out there is going to guarantee that you money that you won't lose. So with that being said, there are strategies, there are different methods that we can follow, different so, so for our audiences, I would like to take them to their investments based on different goals. So you will agree, the most common type of investment will be stocks, right, Selvin? What can you tell us about maybe your experience with stocks? Our audiences start learning a little bit about them.
Yeah, so I mean, so yeah, like you said, there's different types of vehicles when it comes to investing and obviously making some money. I wish I had something to share with you guys, but stocks are obviously they're a little bit more risky. Obviously when it comes to the stocks, we invest in the S&P 500, and there's always that risk. I mean, just recently the market crashed big time. So let's say if you are, you had all of your entire 401k into the stock market. A lot of people, unfortunately, they suffered the losses of the market. There's, so just to kind of touch on that, they suffer the losses of the market, but what I pretty much want to talk to people about is, something that's very similar. Like you still participate in the, in the performance of the market index, but just a more safer vehicle. But when it comes to the stock market, it is very risky. It is very risky.
Okay, absolutely, absolutely, and you touch on a lot of topics there, a lot of to get our conversation going. So it is risky, but there are other, and stocks. When we match it with, I guess, with goals, we usually are looking for long-term investments, right? Usually for retirement, or something like that. We have to aim for that, but there are safer ones. So, for example, ETFs or mutual funds, where that is a more diverse. It provides you more diversification, but they also there are fees. They're managed by someone else, right? So there is that. But you mentioned a really good important point, Selvig, is education. And I tell you, through our financial literacy campaign, we actually have workshop number 5 that unpack everything about investments, that I encourage our viewers to come and check us out. So that's where we learn all this information. But yes, and with the stocks, Selvin, sometimes we, especially young folks, we want to make a quick buck and fast, right? But unfortunately, it doesn't work that way. We have to have build goal oriented. So, for example, you have banking industry, right? I mean, there are some short term goals that it's more safer. So, what would be some of the safer investment options that our viewers here could learn about? So, for example, CDs, right, might be
Yeah.
an example of those at the
Yeah,
bank.
absolutely. So yeah, I mean, so working in financial services, I mean, some of the safer ones, like the more traditional ones that people are used to, is obviously your CDs, your saving accounts, your money markets, which most of these you can pretty much find in you can walk into your local financial institution and you can find these accounts. Now, these are what the majority of Americans go to because obviously, one, they're the ones that that people know the most, and also they're the safest route. Although you're not earning much. I mean, a traditional savings account in a financial institution that gets you like maybe not even 1%, like half of a percent, sometimes 0.05. But the reason why most people like it is because one, it's safe, it earns a little bit, learns a little bit of money, but then also they have easy access to it. Most people, sometimes they want easy access to it. These are for the people that are less risky. They'd rather have access to it when they need it, but they know that it's not gaining any interest. So that's, your traditional financial centers, your traditional accounts. Now, also, there's a different type of person where, there's some people that they prefer the riskier route where, they know that there's potential to get major upside of the market, but then also, that along with that major upside, there's major downside as well. And that's like, your stock market, your 403Bs, et cetera, your 401Ks, et cetera. The most important one that I think, and the one I can even give, I can give a couple live testimonials, is what's called an IUL. Some people may have heard of those. And like you said, we talk about these in our workshops and we educate our communities on these. But, if you don't mind, I'd like to kind of touch base a little bit on what the IUL is, and, kind of give some just kind of give some bullet points on how they work, and, how we invest and things of that sort.
Okay, absolutely, absolutely. Yes, definitely. Yes, go ahead. Yes, explain our audiences. Break it down for us. Its features. Its benefits, and why is that an attractive, maybe financial solutions for a lot of folks. I even heard, in a major newspaper, that actually becoming very attractive to fund kids' educations, for example, college education. I mean, in comparison to other financial vehicles, like in comparison to a 529, because
Yeah.
there are different restrictions. So, yeah, tell us about it.
Yeah, absolutely. And like you said, I mean, the 529s are what most people are used to. But I feel like now, especially with social media now, with TikTok and, Facebook Reels and all that, a lot of people are putting out these clips. And what I've been noticing is that a lot of, I've been running into a lot of these IUL videos. And, it's something, obviously, me selling the product, I obviously believe in it. I'm proof of the product. But what I want to just kind of give you guys a simple definition of what an IUL is. It's an index universal life. So basically, it's a permanent life insurance policy that combines life insurance protection and cash value growth. When it comes to life insurance, most people are used to the traditional life insurance, to where, you have to die and you get access to it. With these here, these pretty much have, amazing living benefits. And, if you guys want to join the workshops, Victor's going to give you guys the time, the dates, the links on when you guys can join. And this is when we kind of get into debt, and we dive into these type of products. But basically, with the IUL, it's basically an insurance policy that grows cash value based on the performance of the market, like the S&P 500, but money isn't directly tied and invested into the market. So pretty much the policy gives you a floor. So it gives you a protection from the market losses. So if I were to put it in simple terms for you, so you participate on the upside of the market. So when the stock market goes up, your money grows with the stock market. Now, when the stock market crashes, your money stays right there. So when I say that the policy gives you a floor, your money stays stagnant. Now, what happens is when the market, let's say, obviously the market is up and down, but when the market starts to go back up, your money starts to participate in the upside of the market. And then let's say, it always happens. You guys know the stock market, how it goes up and down. Once the stock market goes down, these type of policies, they pretty much give you that floor. So you definitely take advantage of the upside of the market, and you don't take, you don't suffer, you don't suffer the losses that you would in your typical, like the stock market. Another thing that's very important with these here is that you can access the cash value tax-free. Like you said, you can get the Roth IRAs, you can get, obviously you access the 401k, you're going to pay a hefty penalty when it comes to these types of accounts. So, and these are what the wealthy use. A lot of the wealthy, the reason why, they don't educate us on this type of stuff, they have people like myself, like Victor, they have us here educating our communities on these, because they don't talk to people about these types of accounts. Why? I'm not sure why. So it takes people like us to actually go out there and educate our communities on this type of information. But you can access the cash value tax-free. And like we said, in a traditional account, anytime you try to pull the money out in case of an emergency, you're paying a hefty penalty whenever you access those type of accounts. So just to kind of, I guess, summarize it, the key benefits to highlight exactly how these IUL works is, you get the tax advantage growth, the market link growth potential. You also get the downside protection. There's flexible premiums. And what I mean by that, to not, kind of confuse anybody, but to kind of get into it a little bit. But when I say flexible premiums, you can increase the premium. You can, let's say a financial hardship happens, you can decrease the premiums. You can even skip the payments. We dive deep into these in our workshops. They also work as supplemental retirement income, and you also have that death benefit, which is the most important thing. God forbid something happens to your life, your life is protected as well. And on top of that, you leave a legacy, and these also have living benefits as well, which we can pretty much expound on in our workshops as well. But just that pretty much summarizes it. Hopefully, you guys find some value in that.
Okay, absolutely, Selvin, and thank you for sharing that. Absolutely, because that's actually what we specialize, right? I mean, one of the solutions, it's not for everybody, of course. It's based on their budget, their goals, but that is a power, one of the stars, star products, that's a solution because, like you said, we have the potential interest that that could be anywhere between 8 or 13 or even above, so and your money is protected as compared to a work, some of us, most of us have our 401k, right? But what happens is that the market comes down, we lose it, and to recover it takes years, so is the safety, so there is no safety. And also, like you mentioned, the taxes benefits. Wow, it's pretty cool just to be your own manager. Basically, you take a loan and you don't have to pay. I mean, that is a sweet deal. I mean, and to to put a cherry on top, if you will. I mean, we don't want to think the inevitable will happen, but hey, at the end of the day, we're humans, right? We all have an expiration date, but while we wait for that to happen, there are living benefits, of course, chronic illness, terminal illness like cancer, and and whatnot. So it is a powerful product. So yes, thank you, and of course, for folks coming on to they can reach out to us, so we can also, as a licensed professional, we can help each individual map out where you are, based on your goals, at least your expenses, and and how we can help you. Selvin and I myself can help you with that. Yeah. So yes, thank you for that, Selvin. But going back to investments, one thing that you were mentioning at the bank, yes, it is. The banks give you very little interest on your return, So and one of the powerful concepts that we learn in our workshops is the rule of 72. Basically, we take the interest divided by 72, and that gives us the interest, basically, or the interest divided by 72, that actually give us an indicator, of how long our money is going to take to double. So with a 1%, a 72, we might not live at 72. So and that leads me to another point. You will agree, Selvin, that I mean, you look like pretty young guy, right? I always say, I wish I have known now what I, maybe 20 years ago, because let's just stress out to folks is the importance of starting early. I mean, maybe guys out there young, I mean, their priority is not retirement or not savings, they want to live the life, but um, when it comes to a time and compound interest, it's very important to start early. What can you chime on that, Selvin?
Yeah, and you're absolutely right. So I'm, and my generation is a millennials. I know they got the baby boomers, Generation X, Generation Z. So I'm a millennial, and you're right. Most people, especially around this age, don't think about, saving or investing, or they don't think about, life insurance in general. But like you said, I mean, most people nowadays are used to, short-term gratification. You invest something, you want to get a quick flip. You're expecting it to get a quick flip. And the thing is that, they say that, what sounds too good to be true probably is in most instances, but when it comes to these type of vehicles that help you actually gain that type of wealth, it actually takes time, and compound interest is huge. And like Victor said, one of the biggest things is, it's that long-term gratification aspect of it. It's like, you plant the seed now. So let's say, you start your investing today, for a fact that, 10, 15, 20 years down the line, that you start to gain that compound interest. And in one of our workshops, what we'll do is that I'll be more than happy to show you guys the power of compound interest and how that works. But basically, it's the long-term gratification that'll make you wealthy. Like I was saying, Victor, I was saying that most people, they plant the seed now, they want that instant gratification, especially in my generation, which that's not how it works. And the vehicles that we discuss in our workshop, we pretty much talk to people about these vehicles that, like, instantly you won't see that gratification. But if you guys understand, and there's some YouTube videos, look at the power of compound interest, you'll see how powerful that is. They say a penny, I forgot how the saying goes, but compound, there's absolute power in compound interest, and the best type of gratification you can get is long-term gratification, and not short-term gratification. Like I said, most people, especially nowadays, they look for a quick flip, but that's not how it works when it comes to investing long-term.
Okay. Yes, you touched on a lot of points there. Absolutely. And one of the popular examples that we give in our workshops is, if you were to say $500, that is about $17 a month, right, for 30 years. So basically, that's, I mean, 8% is over 700,000. But now, if you bump it up a couple of percentage points, it makes it. I mean, you easily cross the million mark. And that's math. That's yes, pure math. Uh, you know, and Albert Einstein, came out with compound interest. And that's why it's called one of the eight wonders of the world. For some reason, right? So it is a very powerful concept, and he even said, those who knows it will take advantage. Those who don't will pay. Basically because compound can also, as we know, it can work against you when you have debt. So that is very 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 powerful. Um, yes, so yes, the workshops teach us all those concepts. So we invite everyone to learn and come. And but there is some also some strategies, and it's interesting that you say, Selvin, and I would like to hear from the audiences, their experience on investing, and because we live on a popcorn, if you will, generation. We want everything now and yesterday, right? But investment takes a while. Takes discipline, right? And also it has to be goal oriented, especially. But with that being said, I mean, there is also sometimes, we follow hype. Will you will agree sometimes, we follow trends, whether it is crypto, whether it's a meme stock, and that could get us in trouble. Wouldn't you say so, Selvin? Something that is trending, everybody wants to get in it, but the truth of the matter is that if you don't know what you're doing, I mean, you could potentially, and I know some people have lost money, unfortunately, because again, one of the strategies is trying to time the market, which is, um, so what can you chime on
Yeah,
that?
no, you're absolutely right. I mean, right now, I think that, and this is like one of my takes, is that we live in one of the wealthiest countries in the world. Yet financial stress is still one of the top reasons for, divorce, anxiety, and things of that sort. But I think that, financial literacy isn't just for the wealthy. I mean, it's what creates wealthy people, is what I tell people. So, the fact that, obviously people are joining these type of workshops, it all starts with the mindset. I mean, this is the first step. Obviously people are it's gonna spark that interest, and they're gonna, obviously that's the first step. You get that interest in, wanting to learn about money and how money works and how money grows here in America. And your money should be working as hard as you do. I mean, we're working hard. We're out here, we're busting our butts 40, 50, 60 hours a week. So I tell people that you're working hard, your money should be working as hard as well. So, if you don't have a plan for your money, the government and banks already do. So, I tell people that all the time, and I'll just leave it at that.
Okay, excellent. Yes, yes, and yes, and that's our job. That's why I'm proud of being part of the financial literacy campaign, because we bring this knowledge to everyone. And basically the knowledge is not only enclosed in Wall Street, but now everybody can invest. It's easier than ever. There is brokerage accounts. I mean, they even brokerage account where you could. I mean, you don't need to be a millionaire. You can have a few dollars and you can invest. Because you can even do a partial of stock, for example. And then there are different strategies. So for example, cost averaging, basically where you don't buy the same price. I mean, you can break it down. And one of the things that talking about education, and encourage you, our audiences, depending on where they are on their journey, the more the better decision that obviously you're going to make, the more informed decisions. So that is key. That's very important.
And I 100% agree with that. And if I can leave something with you guys, and if I can just kind of leave a couple messages with you, is that, I tell people, especially when I'm, hosting these presentations and I'm talking to people, I tell people that financial literacy isn't about being rich. It's about being prepared. So, the goal isn't just to make money, but it's to make money make sense. So, I tell people this type of stuff all the time because, when it comes to building wealth or when it comes to these, wealth strategies, a lot of people think that you have to have a lot of money to, start building wealth and things like that. But it just starts. I mean, I have clients that are investing, they start off with, $50 a month, and then we get to the point to where, you're able to increment that. But that's why you would meet somebody like Victor, like myself, or just anybody in general that's in the financial services space, because then, they'll paint a real picture on, because in order to know where you need to go, you need to know where you are. So like you sit down and you paint a picture, we put out all your finances, and then you start to realize like, wow, I have this, I'm spending on this. And, when you're connected with somebody, in the industry, they'll tell you exactly, how to get to that end goal. And the best time to build your financial foundation was yesterday. The second best time is today. And that's what I tell people.
I love that. I love that. Remember, yes, that today is the best time. So if you're watching this and start investing, is of course never too late. Because and one of the things that we mentioned, Selvin, earlier was inflation. We call it a silent killer. And that's big. Basically our dollars. They won't stretch in the future. So $100, to put in perspective, $100 right now is like in 20 years it will be like having $50. So that's why they say somebody might be happy seeing maybe the 401k plan growing, but hey, but if you still have 20 more years, that might not be enough. I mean, that's not going to be enough. So that's something to, also to consider when investing. Is the inflation. And even if you decide to not to invest and just keep your money under the mattress, if you will, or in the closet or in a safe, I mean, you're still making the decision. Yeah, that's a decision, but and it's losing value. So inflation is killing you either way.
They say it's a silent killer because for those that understand inflation, it's obviously the rise of prices over time, but the decrease of the dollar. So I mean, a gallon of milk that cost $3, 10 years ago might cost $5 today, and that's 66% more. Now, did the gallon get bigger? No, the gallon stayed the same. So your money didn't grow, but the prices did. So inflation erodes the purchasing power. But yeah, like you said, it's a silent killer.
Okay, and I think we have all noticed that now they coming same items is coming in smaller packages. So maybe not not the same quantity, maybe the same price but smaller quantities. That's one way to that they're reducing. Um, yes, but going back to types of investments, and here like Larry, he's he's with Home Alliance and he provides properties, opportunity to buy for retirees and veterans, and anybody that wants to buy a house, right? But speaking about properties, it's another long-term investment, right? Now, each investment has its own goals, right? We have to be goal oriented. I mean, typically when you want to pass maybe long legacy, right? And now one of these advantages of if you will, about a property, is the access to liquidity. I mean, and that's, I think, is very important to have access. How fast can you access your money? So I think that is really really important when it comes to investment decisions. Because if you need a car for, I don't know, if you need investment for a vacation, or maybe something faster to buy a car, it wouldn't make sense to invest in a property. So that's something that we have to keep in mind also when making the decision to invest. How quickly can you access your money? And going back to the IUL, that's an opportunity that gives you to, hey, you can actually borrow against your earnings, at any given point without a penalty, without paying taxes.
Yes. Yeah, and I really enjoy what you're speaking of, and really encouraging, our community to start investing in themselves, and understand that there's only so many hours in a day. You only have so much energy, and so when you invest, actually, that you put that money to work, and so that money can work while you sleep. Um, but what I liked, I think this IUL that you're speaking of, um, because you're able to, because we're always reaching to, do certain things. When I'm saying reaching, meaning that we need to purchase something and we don't have the cash up front, we don't have it all, and so it seemed like the more urgency that you needed, is that it costs you dearly to go get it. And so, speaking to how about borrowing money from your own investment, borrowing that money, and how much of it a good advantage of that to be your own bank, and then having the option or not, whether you pay it back at your speed. Just have you do you know of any scenario, a person that have actually borrowed from their fund and was able to take care of a crisis or a need?
So I've had clients where they've accessed money from, well, Victor, he might, be able to give you a real life scenario, but I've had clients where, because obviously a few of the key benefits when it comes to the IOL is obviously you get the tax free, you get the flexible payments, and like you said, it's essentially, I guess you can kind of say like your own bank, because you're borrowing from the interest that's there, and then you get to pay yourself back basically. So a lot of people, when they talk about becoming your own bank, essentially it's in these type of accounts. But Victor might be able to tell you guys a little bit more.
Okay, absolutely. And that's the beauty of a product with all the features and its benefits. Because there are many folks that are using it to, save for a down payment, or even, like I mentioned earlier, fund the education of a child. Uh, you know, it's a vehicle that give you a lot of options. And yes, if you have an emergency, that's emergency fund, and you are taking advantage of the downside market, the protection that we were talking about. There is the
Hmm.
floor. And also it has all benefits. That one thing that you have to keep in mind, I think you alluded to this, Larry, is that at the end of the day, that's an insurance product. The longer that you get, you have to qualify. So if anybody here is watching this and listening to us, might want to actually look into it, because not everybody gets it, and also it's not for everybody. So based on your goals, based on your needs, or what you want to accomplish, it will is I mean, it is a well-rounded product. you know and one of the beauties also, we have to understand, is life insurance, for what it was years ago, like we have mentioned before, and now the industry is competitive, right? So they come with better products. They come with with what the public is demanding. So that is one of the beauties that we have the option to select those. And so absolutely, definitely has many benefits. And yes, being your own manager, we kind of eliminated the banks, because guess what? Big banks, I mean, we deposit the money in the bank, but they turn around and they actually invested in these insurance products. So Definitely, that is one way of, if you quote unquote investment, if you will.
Yes. Yes, and I know you touched on a little bit, but also just I see that Hernandez here is probably less than 35. I'm quite sure. How important it is to go ahead and get started.
Yeah, absolutely. So that's why, like, when I host these seminars, I talk to I talk to my generation, and obviously any generation. You're not too young or too old to learn. And I learn from people younger than me. I learn from people older than me. But I mean, yeah, when it comes to like financial literacy, it's something that it's a never-ending game, and it's something you're going to continue to learn. I mean, I have people that are 19 that they know some things and that I didn't know, and I learned from them. So I enjoy it, and I enjoy teaching people this type of information as well. So I'm 32, by the way.
32. Okay, I was close. Yeah, but it's amazing to see you there, and also to share your story. Your story, seeing a real person that is getting involved. And I saw earlier your mom, and so what got you started into the securities and being interested in educating the community on this?
Well, let me see, I got into banking when I was like 19. So, I went to college for 2 years, and I just, not to discredit, because I think college is essential, and I think people need it. But I just got into banking, and then I learned about financial services, and anything that had to do with money and finance was something that intrigued me at a young age. And I started off as a part-time teller working at a bank, and then I ended up working into I'd say before 30, I worked at a couple different financial institutions, and then I was a credit underwriter at Capital One's auto finance department, and then I got my life insurance license. And then I'm just a sponge, and I just like to learn new things. And everything that I learned, I used to get all my boys together, and I used to say, all right, look, this is what we're going to do. We're going to talk to people about, people ask me, what do you do? Because a lot of people don't know what I do. And I'm like, I just help people. I help people. And I used to work for Zillow. I was in the real estate space as well, but I help people, save money, protect their income, and invest money. Simple as that. When people ask me, and then people start to get intrigued and they start asking questions, and I tell them exactly what I do. And then I just talk to people like I'm talking to you guys now. And then I teach you how to do these presentations to other people. And then that's how we get into the communities. And, my generation, for example, like the millennial generation, it's harder when, let's say, someone, different, let's say, it's easier for me to reach my generation because I'm there and I'm them, and they can feel me more than they can feel, John Smith, that's maybe 72 years old. I can get into my communities and I can talk. They're going to trust me, so the trust is already built there, and obviously, I might, if I'm hosting a home buying seminar, Larry, to, let's say, maybe some veterans, and I'm not a veteran, and they just can't relate with me. It's going to be harder for me to get to them. So that's like, that's your area of expertise. And I think that this generation needs it, because this is the biggest wealth transfer in history right now. And I think that we just need people in the middle to transfer that money from one hand to another. And that's where we come in, and obviously educating people on other things like home buying and things like that. So
that sounds good. Like our economics and investment is going to be in good hands, as long as we can continue to grow and influence that your generation and the next generation to pick it up and start, because we want the next generation to be if you want to say better off, to be able to sustain soon definitely if possible, just as well as the previous generation. And I know you can't rush things, but I know you can get started early and build that foundation. And I think what you're doing with financial literacy is the way to build that. And you keep preaching it, then someone is going to catch someone, because there are some that hear it. I know we have a community here that hear this on a weekly basis. I know they hear it annually, but they're still a little hesitant about getting started. What are some of the discuss about either one that want to answer in reference to waiting until you 60 years old to start versus doing it at 30?
Okay. Well, yes. I mean, is there is a cost of waiting, of course. I mean, whoever is starts early is going to pay less. Because there is inflation, and also the older that you are, it's going to take you longer. Is that simple? I mean, someone, for example, started longer than they just they start investment, they leave it alone, and then someone that starts later, they have to probably do double that amount in order for them to have the same amount. So just to put in perspective, so the cost of waiting, it is huge. So yes, so that's why I say if you are 20, you have time on your hand. Time is your best friend. If you are younger, time is your best friend. So you put that money to work for you, and grow over time. Take advantage of that compound interest. So that's my recommendation.
Yeah, just to piggyback on that, I mean, yeah, you definitely pay a cost for waiting because many people think like, I'll start saving and I'll start protecting my family's wealth later on, or I'll get to this financial stuff later. But the problem is, time is the most powerful asset. So every year you wait, every year you lose potential growth. So I mean, that's how kind of leave it at that. So yeah, time is of the essence.
Yeah, and you're saying that with a person, with the dollar cost averaging and things of that sort, you don't have to put in $500 a month, do you?
Not at all.
Absolutely.
Actually, the first, I guess, an investment account that I opened was, it cost $2,000 to open it. It was called Daytech. I think that was the name of it, Daytech account, and you had to have $2,000 to open the account up so that you can actually do, have a little brokerage house that you can purchase stock. And then this was different from mutual funds. But so to purchase stocks directly, what would you say a person could, if they wanted to, of course, purchase stocks? I mean, what was a recommendation to get started?
I typically tell people when it comes to investing, I mean, small steps matter. Obviously we do a full financial analysis, and we don't want you investing $500 a month if realistically you can't afford it. So, especially for the people that are skeptical or they're like, oh, not sure, or obviously after the financial analysis, we'll get a real picture as far as like what their discretionary income is left, what's realistically left over at the end of the month, at the end of the month. But you don't have to be rich to start building wealth or to start protecting your family's future. Even $20 a month can grow into something
Mhm.
meaningful over time. The key is consistency and starting early, because obviously, with time you'll start to see the compounding effects of the interest, and then instead of 20, you might want to put 100, and then from there, I have clients that just understand the concept right away, and they're like, what? You give them the illustration, and then it makes sense to them, and they're like, wow, what? I can put $1,000 into this policy a month, or I can put 500. It just all depends on how they look on it. But for the people that are skeptical, you don't have to be rich to invest. You can do $50 a month, and you can protect your family's legacy.
Super, super.
Yes, and a couple of things that I would like to add. I mean, in addition, folks coming to us, for a financial analysis. But it's somebody, and everybody has different options, right? And they are different now. I like the idea that the investment is not only for the folks in Wall Street, but anybody, even if you have a few dollars, you can do. And I mean, there are different a brokerage account that allows you, like I mentioned earlier, to do a small a partial of stocks. And also one thing that I would like to mention is the more that you get educated, there's a diversification is very important, right? And see what maybe industries are trending. For example, we have AI right now, the AI boom. For example, I mean, if you do research, if you carefully plan, and of course, consult a financial professional, because back in the days, I myself bought some stocks for example, on Netflix or Facebook, you know. But again, it's about timing. If you leave it, but some folks, you know, they don't have the appetite of the stomach, if you will, when they see that the market takes is plummeted. I mean, they can handle. So it's also very important to understand, you know, how much how much you can tolerate. Now, those are those options. But here with when you come to us, you know, if you don't want to be, you know, day trading, or you don't want to be, you know, keeping an eye on the market, because that's time consuming. That's, you know, that's when we come in, and you can, you know, we can, you can rest assured that your money, you know, won't lose value. So that is an upside, right? That you have with the different financial products that you might qualify for.
Super, super. All right. Well, I really appreciate you guys, sharing the knowledge tonight. And so you spoke about some workshops. Talk to our audience in reference to how they can get information on maybe, joining you on the workshop.
Okay, absolutely. Let me just go ahead and share our contact information really quick. So folks can reach out to us, and if they have any questions, it will be our phone number and our email. And yes, we have the workshops. They are on weekly basis. They are 3 times a day. They are at 2 p.m., 8 p.m., and 10 p.m. that they can join. And they are totally free to anyone. Give me 1 second. Let me see if I can get this up here, and they can you can all welcome to. I think I'm sharing my our contacts. So there is Kelvin, his phone number, and also my phone number. I think you guys can see it there. So feel free to reach that to us, and we'll be happy to again sit with you, set up. You know, whether you have debt or maybe you have a lot of money, you're looking into. We can help you anything from an annuity to basic budgeting, or to map out a plan to get out of debt. That's where we can help you with. Reach out myself or Kelvin, and we'll be happy to help you guys. But yes, Kelvin, what would be some last thoughts that you might want to leave our audiences with?
Yeah. So yeah, my contact. I wasn't able to see anything. But yeah, I find a lot of value in these workshops, and Larry, I really appreciate you letting me join this. Oh, there we go. Perfect. Yeah. Letting me join this call today. But, the best time, like I said earlier, the best time to investing was yesterday. The second best time is today. I hope that you guys find a lot of value in this. When it comes to financial literacy, it's something that, it's a never ending process. You'll find that you don't know what you don't know. So joining these, you'll definitely get a lot of value. And I'll be more than happy to jump on another one with you guys. But yeah, I'm here to help add value to our communities. And if you guys need anything, please don't hesitate to reach out. And Larry, I really respect what you're doing for the communities as well. This is stuff that we need, especially assisting with the home buying process. I think that's very valuable, and I appreciate you and Victor as well. For everything that you guys are doing. And I'll leave it at that. But thank you so much.
All right. Well, thank you again for coming on this evening, and we look forward to seeing you again. And so you'll definitely be invited to come back. And of course, Victor, we have another round next week, and so I can't wait to get to next week. I think we're going to be talking about retirement, and so we really appreciate that. And so, again, if you want to find out more information, get information for Victor or Kevin, there's their information there. And please take a note of that. Yeah, of course, you can take a snapshot of it. But if you need it, just in case, if you miss it, if you're hearing this audience, this recording at a later time, of course, just contact First Home Alliance, and we'll definitely pass that information on. Okay. And so what I want to do is just cover upcoming events. And we just right around the corner from our financial, we're around the corner from our gala. Our gala is going to be on Saturday, also, you can continue to get information for First Home Alliance. Just visit our website, and our website is at firsthomealliance.org, and continue to follow us on social media. And again, I want to say thank you for joining us tonight, and also thank you, Victor, for bringing us that great information, and look forward to seeing you again next week. And everyone, have a great night.
All right. Thank you, Larry. Thank you, everyone. And
All
follow
right.
us on continue the conversation on social media. Good night, everybody.
All right. Good night. Bye-bye.